Hey everybody, thanks so much for joining us this afternoon or this morning or this evening, wherever you are tuning in from today. This is Greg Lewis, Director of Marketing for MetaStock, coming at you from my basement. I think we're on live now. Looks like I'm live. I hope I'm live. Saying hello to Shoot Target. My Arabic's a little rusty, but I think that says Shoot Target. Actually, I looked it up, but that's what it says. Anyway, hello, Shoot Target. Where are you coming in from today? I also see we have Jeff Gibby on the line. Hello, Jeff Gibby. Hey, we got several people are already coming in. We'll be starting the actual webinar in about 4 minutes. As you are coming in to chat, please go ahead and let us say hello. Hello, Shayam S. Let us know where you're tuning in from. We'd love to hear that. And if you have any questions for me before we start about MetaStock or anything, go ahead and ask them. So for today's presentation, we have Kevin Nelson, who is a good friend of mine, a good friend of Jeff Gibby's. In fact, he used to be the sales manager here at MetaStock for years and years and years. And he went off in his entrepreneurial fashion to start a company called learnmetastock.com. And he's going to be presenting today how to ID high probability buy signals, which sounds fascinating to me. A couple of things. One, I want to let you know, of course, again, we are recording this from our separate domiciles because of the strange world situation. Hello, Paul Lewin. And to that end, I hope everyone is safe and sound and staying safe wherever you are in the world. And again, thanks so much for tuning in with us today. We got about 3 more minutes. A couple things I wanted to point out. We are simulcasting today on YouTube as well as GoToWebinar. If you want to watch this on GoToWebinar, it's not too late to hop over to metastock.com and register there. Just go to metastock.com and then go to the webinars button and you can register for this real quick. The experience is essentially the same. We don't care whichever one you'd like to do. Also, if you have questions here on YouTube, go ahead and chat them in, and Jeff and I will be sharing them with Kevin during the presentation. When you see MetaStock on the chat, that's me, Greg Lewis. When you see Jeff, that's Jeff Gibby, who is the Director of Sales currently at MetaStock. And Kevin won't see that, but we'll be passing those on to him during the presentation. Also, a question we are often asked is recording. We are recording this currently. All you have to do is come back right here and play it over and over as many times as you'd like. It will always be here on MetaStock. Another thing I'd like to do is remind you that this is sponsored by MetaStock. And if you don't currently have MetaStock or if you don't have the latest version of MetaStock, I'd like to point out that we do have an offer right now. Let me see. I'll go there real quick. This is our landing page. It's metastock.com/ADMM420. That is metastock.com/ATMM. I have it written down somewhere. ADMM420. And right there you can see that you have opportunities to get MetaStock upgrade. You can get MetaStock at a discount if you don't yet have it. You can get discounts on subscriptions. So it's a good offer overall. And we encourage everyone to visit metastock.com/ADMM420. Okay, we've got about a minute left. I'd also like to remind you to stay to the end because Kevin will be offering you a special deal regarding his services, which you don't need to take advantage of anything he's going to be talking about today, but I think you'll be very interested to find out what that is. So we've got about a minute left. I'm going to go ahead and stop talking and bring on Kevin and Jeff in about 1 minute. webinar. I hope you're doing well. I hope you're staying safe. I hope you're staying healthy, and I hope you're ready for an exciting legal disclaimer. Let's go. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. I apologize. I almost started laughing there because I was thinking kind of in the back of my mind, different stories I could tell you about Kevin Nelson. And I'm not going to do that today. Maybe in the future we will. But Kevin was and still is a very smart guy. He was willing to hire me. So that kind of gives him some good ideas in terms of like how smart he actually is. But he's a great guy. He's probably had like a huge amount of experience with MetaStock, and I'm very, very interested today into the way, kind of the approach that he's got for today's class, going through kind of some of the methodologies and the codes that he's gotten from the Stocks and Commodities magazine. And I have nothing but respect for Kevin. He's a really, really nice guy. And let's go ahead and bring him on here. Kevin, how are you doing today?
Doing good. Thanks, Jeff. Thank you for that introduction. That legal disclaimer was truly exciting. So yeah, that was really good.
You know, I try and say that differently every time.
Let's see. Hang on for just 1 second. Okay, so can you see my screen okay?
We can see that.
All right,
I'm going to get right out of the way. Your turn.
Okay. Great. Thanks, Jeff. As Jeff said, yeah, my name's Kevin Nelson, and our website is learnmetastock.com. And the only thing we do at Learn MetaStock is help people get more out of their MetaStock program. So that's our goal. I've got a lot of different ways that I can help you out. And what I'll do is at the end of today's presentation, I'll give you a short overview of the website and some of the different things that we offer. So, all right, so let's go ahead and jump into the presentation here. And what I'm going to be doing here today is one of the things that we do on our website there is, or through our learnmetastock.com, is we'll take different trading strategies, whether they're published either, for example, like in a book or a magazine or something like that. And then I'll do my best to actually show you exactly how to duplicate that particular trading strategy. And when I do this, I also will write formulas, and I'll make these formulas available for you to download when you're a Learn MetaStock subscriber. So, and that's exactly what I did with this particular article. So this one here that we're going to be doing today came out of a magazine called Technical Analysis, Stocks and Commodities. And if you haven't seen this particular magazine before, and if you enjoy technical analysis, I would highly recommend this magazine. There's a lot of really good information there, to say the least. The article that we're going to be looking at here is called Identifying High Probability Buy Signals, is published in the December 2018 issue. And it was written by a gentleman by the name of Francois Picard, along with George Rollins. Now, this particular example here, hang on for just 1 second. Jeff, we have, it sounds like we have some other microphones maybe that are active. I don't know if we can.
I'm sorry about that. That's fine.
Oh, okay. Great, thanks. So basically with this particular strategy, there's two different strategies that they presented. And when somebody told me about this particular strategy, I noticed right away that they were claiming very, very high win-loss ratios and very high percentage numbers. That was, again, pretty hard for me to believe, but the strategy itself was super basic. And for that reason, I definitely want to take a closer look at it and see if we could maybe duplicate it. And so that's exactly what we did. And I do want to state here that every time I take an article or a strategy or something like this, 99% of the time, there's always something that maybe just doesn't match up exactly for whatever reason. So point being is I'll do my absolute best in order to duplicate these to the best of my ability. But again, there's a big disclaimer there that it might be off just a little bit there. So anyway, so in this particular article, what they did here is they actually have two different strategies, and both of the strategies, again, very, very simple. And the time period that they use in showing how these strategies perform, they chose the time period from January of 2010 through June of 2016. And the strategy itself, or the first strategy is they're just looking for 9 consecutive closes below a 20 period simple moving average. So in other words, we're just looking for the price to close below the moving average 9 out of 9 bars. And that's it. If that happens, then you're literally going to go long. So in other words, what you're looking for here is you're looking almost for a reversion to the mean almost. Maybe you've heard that before, where the prices are trending down and they're expecting the prices to start moving up. Now, to get out of this particular strategy, again, very, very simple. All they did was use a time stop, and they said, we're going to exit out approximately 1 month later or 22 days. Okay. So let's go ahead and jump into the program here, and I'll show you how we did this, or how we duplicated this. So what I've got here on this chart is I just have a chart of the SPY, symbol SPY, which is the ETF of the S&P 500. And plotted on top of it is a 20 period simple moving average. Excuse me. So the idea here again is what we're looking for is we're just looking for the prices to close below that 20 period moving average for 9 bars in a row. And as of course we had this huge drop here in February, so we definitely met the criteria here, but then we'll take a look at some of these other moves back here as well. But so when you again become a subscriber to the Learn MetaStock site, you have these formulas that you can download. But these particular formulas I'm going to be showing you today are actually pretty straightforward. And I'll go ahead and explain them to you as we load them. So once you load them or download the formulas into your program, all the formulas from the Learn MetaStock site have a prefix of LMS in the front of it. LMS is for Learn MetaStock. And for this particular strategy, there's going to be 2 formulas. There's the Learn MetaStock High Probability Moving Average Reversal and the Learn MetaStock High Probability Price Reversal. So the first one we're going to plot here is the High Probability Moving Average Reversal. So I'm just going to drag this up here to the very top. And what this is going to plot for us, it's going to plot what's called a binary indicator. Now, for those of you who are familiar with this, basically what a binary indicator is, or in MetaStock, is that you can ask the program a yes or no, true or false type of question. And by default, what it does is that when the answer to your question is true, it comes back with a value of 1. And when the answer is false, it comes back with a value of 0. So very quickly, I can see exactly when my formula was true and when my formula was false. So let's go in and take a look at this particular formula. So I'm going to go ahead and open up the indicator builder. And again, I'm going to scroll down to my LMS formulas here, and we're going to open up the high probability moving average reversal. So here's the code for this particular indicator. You'll notice that I've got 3 different variables in this one: A1, buy, and exit. So my first line of code right here, what this is looking for is, first of all, looking for the close to be above a 20 period simple moving average. Okay, I'm sorry, the close to be below the moving average, not above it, but below it. It's less than. Okay, so that's the first part of it. The second part of this formula is we're using a function which is called the sum function. And the sum function counts how many times something has happened over a particular period of time. In this particular case, I'm looking for a window of 9 periods. You'll see the 9 at the end of this formula. So in other words, what it's looking for how many times the close closed below the moving average over a 9 period window. And you'll see at the very end here, it says equal to 9. And what I'm looking for here is I'm looking for exactly 9 cases of where that close closed below the 20 period moving average. Okay, so that's my first part of the formula. It's looking again for that close to be below that 20 period moving average for 9 bars in a row. When that's true, that's going to make A1 to be true. The second line of code here says buy is equal to A1. So in other words, A1 has to be true, and you'll notice the next part of the formula says ref A1 -1. That's looking for the previous value of A1 of the previous bar. So it's looking at the previous day's bar and identifying what that value was. And then it wants to know if it was not equal to 1. So in other words, it wants to know when it was false. So in other words, what this second line is basically looking for, it's looking for the very first case of when this became true. Okay. So now when I want to plot that on my chart, what I do is I just tell it which variable I want to see. So in this case, I just want to see the buy signals. So I typed out the word buy, and that's exactly what we have plotted here in the background here. So I know that it happened right here. I know that it happened right here. And I know that it happened right here. So to check it, let's kind of zoom in on a couple of these signals right here. I'm going to zoom in right on this little section right here. And to check our work, let's take a look. This one's pretty clear. So this one lines up right on this vertical line. So we'll look at this one. So it looks like it became true on August 12th, for example. So now I want to make sure that this is working correctly. So I'm going to count backward in time. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9. So the first time that it became true was on July 31st. You'll see that the previous bar on July 30th, it was not true. That was clearly above the moving average. So this is when our formula became true, is when this 9th bar closed below the moving average. And so therefore, that's exactly what I'm looking for. So for our first formula here, this is what I'm looking for, is for the 9th bar to close below that moving average. So again, that happened at that point. That happened right there at that point. And again, it happened right here. And that was, what day was that? That was March 5th that it happened again right there. All right. So that's our buy signals right there. And then on the opposite side of the coin, if you want to see what the formula was for exiting out of that buy signal, we're going to look at the time stop portion of this formula. So again, I'm going to open up our indicator builder and open up that same formula, but this time, instead of plotting the buy signal, I want to plot the exit signal. And the exit signal is our third line right here. And this one is identifying how many bars have passed since the buy signal was true. And you'll notice that it says bar since buy. So it's identifying this line right here. We want to know exactly when that has hit the number 22 or 22 bars have passed. So if I click on OK and close that down, you'll notice now that our indicator now jumps forward 22 bars from that buying point. So if we were to count backward from that point right there, we would have our buy signal 22 bars earlier. So that's our whole strategy. The whole strategy, again, is we're just looking for the close to be below that moving average for 9 bars in a row, and then we're going to look to exit 22 bars later. That's it. So let me jump back into this formula here, and I'm going to have it plot the buy signal again, just so we can verify this. Now, the next thing I want to do at this point, once I've got this part working and I've got it working correctly, next thing I want to do is I want to back test this trading idea and make sure that that my signals are lining up with what they showed in the article and that they're working correctly. So to do that, we're going to open up our system tester here. And again, in the system tester, if you scroll down to the formulas here, you're going to find 2 system tests that are pre-written for you. One is the LMS high probability moving average reversal and the high probability price reversal. So again, I'll just open up the first one here. And you'll notice that I just put in a quick note of what the system does. But again, the formula is very, very simple in this case. All we're looking for, again, is we're looking for that buy condition to be true. All right. Now, to get out of the buy condition, we have to identify what the condition is to exit out of the trade. You have 2 different options here. We could put in the formula to actually count from the buy signal here, but a very, very easy way to put in the time stop into a system test is to go to your stops tab over here on the right-hand side. And then down here at the bottom, you've got a choice which is called an inactivity minimum change. And so what I'll do is I'll select the long position. And then what I'll do is I'll put in a very large number here for the minimum change, saying if that I would get out if we hit 100 points, for example. And I know that that's not going to happen. But instead, I know that I'm going to hit 22 bars before I get 100 points, for example. But so in other words, what my stop is going to be, it's going to be after I get into the position, it's going to get me out 22 bars later. So again, really easy way to put a time stop into a system test by choosing it this way. Next, I'll click on OK. And then we'll go ahead and run this strategy. I'll go ahead and enter in the SPY for the symbol up here at the top. I'm going to choose a long trade. I'm going to tell it to go back over the last 1,250 records. And actually, yeah, let's go ahead and run this one. I'll go ahead and choose the trade options. I'll just show you how I got my trade options set up. Underneath the account, I'm going to run a points only test. Points only test only returns back a raw number of points that were gained or lost. It doesn't factor in the price of the security or anything like that. It's just a raw number of points. For the broker, by choosing the points only test, that'll gray out this whole area here. So there's no interest rates coming into play. There's no margin coming into play. And for commissions, I have 0 set for that. And for the trade execution, you'll notice that I've got all the fields set to open. So if I get a buy signal, I'm going to buy at the open. If I get a sell signal, I'm going to sell at the open. And I'm going to buy and sell with a 1-period delay. So if I get a buy signal on Wednesday, I'm going to buy it on Thursday at the open. If I get an exit signal on Friday, I'm going to sell it, or I'm going to sell it on Monday at the open. All right. So we'll click on OK. I'll go ahead and click my start system test, and we'll go ahead and start this. And if you have questions, by the way, and if they're pertaining to what I'm doing, if you have a question about this particular item that we're looking at, make sure and let me know. Otherwise, save your questions till the end, and I'll be happy to go through those and your questions at that time there. Okay, so here's our system test results. For example, for the SPY, going back, you'll notice that we tested 1,250 bars, which went from for approximately the last 5 years, going back through May of 2015. The profit was 53 points, and the buy and hold was 73 points. So the first question is like, okay, well, hold it. That didn't even beat the buy and hold. I mean, maybe this isn't a great system. And I know a lot of people stop at this point and they just start to look for something else. But there's a lot that you need to understand when you're looking at system test results. There's a lot of different fields here that will really change this picture quickly once you learn how to interpret them. So for example, like in this particular one, you'll notice that we had 16 trades, and 10 of them were winning trades. So, so hang on for 1 second. What is the, gosh, that's what, about a 65% winning trade, somewhere around that area. And out of those 10 winning trades, for example, the average profit was 8 points. And then the average loss was 6 points for those losing trades. Okay. So that's one thing to take a look at. And in fact, in my opinion, one of the most important things you can look at when you're looking at a system test results is your average profit to your average loss. And what I always talk about whenever I'm doing something like this is I always recommend somebody shoot for at least a 3-to-1 ratio, meaning that your average profit is at least 3 times the size of your average losing trade. And the reason why is that if your average winning trade is 3 times the size of your average losing trade, you can be wrong a lot of times and still make very good money with that particular strategy. And even if you come in at maybe like a 2-to-1 ratio when you really start trading, even if you're wrong more, you can still be wrong more often than you're right and still make good money. So again, if you shoot for a 3-to-1 ratio, that's going to give you a lot of wiggle room in case the system doesn't operate the way that you were hoping that it would. But in this case, you'll see, again, this is a pretty close win-loss ratio here, 8-to-6. That's, in fact, in my opinion, that's too close for me, but we'll talk more about that here in just a minute. The other thing I want to talk about is this auto market timing field down here. This tells us how many bars we were actually out of the market, how much we were in the market, and how much we were out of the market. In this case, we were out of the market almost 900 bars. Now, keep in mind, if we go back up here, we only tested 1,200. At 900, that means that it generated these 53 points over 300 bars, not over 1,200 bars. It took 1,200 bars to generate 73 points. Okay, so that again is a really important number. What that tells me is that if I can generate this type of number over, a fourth of the time, otherwise, that frees up my money to do other things, to look for other trading opportunities. So again, I feel that that's a really important number as well. But one of the things I like to do is I like to click on this plot on chart down here at the bottom, and then I'll close down these dialogues here. And this is my equity curve at the top. So I'm just going to close that. So what I'm looking for here is I want to make sure that it's buying and selling where I want it to be buying and selling. So I'm going to grab my crosshairs over here, and let's kind of zoom in here just on this last trade right here. So this last trade, here's the signal here on March 5th. And you'll see that we got into the trade with the 1 bar delay. It got in on the next day of March 6th. So that's exactly what I was looking for. And then if we count these bars, you'll find that we exited out 22 bars later. So that particular trade, again, like I say, that was in March. That was in our big drop there. Obviously, it didn't turn out very well. But you'll notice that a lot of these other trades actually did turn out pretty well. For example, here's a trade back on October 9th with an exit right there. We'll go back here a little bit further. There's one right here on August with an exit back on September and so forth. But anyway, so once I understand that this is working correctly, the other thing that I want to do now is I want to go back and I want to retest this now over the time frame that they actually showed in the article. So to do that, they tested this thing. I'm going to go back through January of 2010. Let me go ahead and change our time that we're going to be testing. We're going to change it from January 1st of 2010 through, let me go back through June 1st of 2000 and what was it, 15? 2016. Okay, so 6 years of time. Then the other thing that they did in the article as well is they actually tested 9 different securities, and they used ETFs. And these are the ETFs that they selected. They chose the energy ETF, which is XLE. They chose the Euro currency, which is FXE. They chose the Qs. They chose the 20-year Treasury bond ETF, an emerging markets ETF, Russell 2000, the Dow Jones Industrials, which is the diamonds, DIA, the gold with GLD, and also again then the SPY. So they chose those 9 to kind of give us a broad representation of how this might perform over a lot of different types of markets. So that's what we're going to do next, is we're going to test this strategy over 2010 through 2016 using those 9 securities. So again, I'll click on my start system test and we'll begin this process and we'll see what we come up with here. All right. Now, when it's finished, we'll click on our view results. All right. So this is what they basically showed in that article. And that is the results over this time period, this 6-year time period ending back in 2016. And as you can see here, the top performing security out of that basket over that time period was the diamonds. And so let's go ahead and open it up. It generated 72 points. It had 21 total trades, 16 winning trades with 5 losing trades, and the average winner to the average loser was 143. What that 143 means, how you interpret that, is that for every dollar that you lost or I lost on a losing trade, I made $1.43 on a winning trade. Okay, so this is that number that I was talking about before where I like to shoot for a 3-to-1. So coming in at 143 is, again, not even quite half of really what I'm looking for. So this is pretty low. But on the other side of the coin, 16 winners out of 21 trades and so forth, that's definitely getting a pretty high percentage. So 15 out of 19, that's 79% right there. Let me just take a quick look here, by the way. What is 16 out of, I don't know what that percentage is, but I'm just going to take 16. We're going to divide that by 21, and that's 76%. Okay, so the diamonds did 76%. The spider did 79% if it was 15 out of 19. So, all right. So let's go ahead and open that up. So this is the test results again for the diamond, testing 1,600 bars. The profit was 72 and the buy and hold was 72. Okay. So this is one you definitely want to take a closer look at. 21 total trades, 16 of them were winners. We'll scroll down here a little bit. Your average profit was 5.7. Your average loss was a little over 4. So again, that's too narrow. That's only 143 difference. So just not enough right there. But we'll scroll down here a little bit and look at this right here, this out of market timing. It's saying that it was out of the market 1,169 bars. We only tested again for the 1,600. So it was out of the market less than 500 bars. So in this particular case, it generated the same amount of money over a buy and hold in what, a third of the time, right? So again, that's pretty interesting to me. The other thing I like to take a look at is I like taking a look at the equity curve right up here at the very top and just seeing how this thing actually did over that period of time. And what we're looking for is we're looking for as smooth of a line as possible. Whenever it goes flat like that, that just means that it's out of the market. But we're looking for this line to be sloping upward. And every time it goes up like this and then it drops down, we know that we had a bad trade. And I'm sure this is probably in our February time frame right there when everything had a hard time, to say the least. But then the other thing I want to do is I'll click on my plot on chart. And then what I'll do, of course, is then I'll go back and I'll double check those signals there again as well and make sure that they're lining up exactly where I think they should be lining up and giving me those buy and sell points. All right. So let me go back into that system test there. And so that, of course, that shows us the results going back 2016. But what's more important is how have they done over the last 5 years? Because we've had a completely a different set of markets over these last 5 years. So what we'll do instead is I'll go back and I'll tell it to go back over the last 1,250 bars, or approximately 5 years of time. Excuse me. And we'll test that same 9 basket of securities, and I'll click on my start system test again. All right. And we'll go and take a look at these. All right. So now, as you can see here, it looks like we've got some different results here, to say the least. And it looks like they're not quite as profitable overall. And now the top producer in this particular case, going back over the 5 years, was the SPY. That was the one that we looked at previously. Then we've got the Qs, which performed, it made 10 profitable trades out of 15. Looks like the Treasury bond did 13 out of 20, and then the gold did 11 out of 21. And the numbers are a little bit higher here again. But again, just taking that same strategy and then just running it over the last 5 years instead of going back through 2016. And again, if you want to take a closer look at any of them, of course, then you can just kind of double click on them and take a look at it. So for example, this is the Qs. It generated 43 points. The buy and hold over that time period was 111. We'll scroll down here a little bit. We had 10 winning trades. The average winner was 6.9, and the average loser was a little over 5. We were out of the market a total of 900 bars out of the 1,200. So it generated this over about 300 bars. All right. So then, of course, whenever I do something like that, it's like, okay, it tested well over the time. It tested better over the time period that they showed in the article, but over the more recent markets here, it didn't test as well. Is there anything that we could do to possibly try to improve, something like this? Well, as you might imagine, there's countless tweaks that you can make to any type of trading strategy. And that's one thing that I try to do whenever I try to review other systems. And I'll just show you a real quick one here that I did on this particular one. So I'm just going to zoom out here just a little bit. And I'm going to change this chart here. Let me jump over here again to the SPY. Oops. I don't know, it looks like I brought up the wrong chart here. So let me try that again. I'm going to do the SPY, and we'll do that. There we go. Okay. So what I want to do in this case now is I notice basically with this strategy, it's kind of a reversion to the mean type of strategy again, right? And what I'm talking about there is that we're looking for the prices to drop below that moving average and then snap back to the moving average and or trade above it, right? So what if we added another factor to it and maybe added an additional moving average to it and a longer term moving average. So for example, from my drop down list, I'm just going to grab another moving average and plot it here on my chart. And for this example, I'm going to plot 100 period moving average on here in addition to the 20 that's already on there. All right. So here is my thought process, and that is, rather than just saying that looking for the prices to drop down below it, but maybe say, in order to take one of these signals, what I might be looking for this time is I want to make sure that the prices are also above this longer term moving average before I get into the actual trade. So in other words, I'm just looking for a short retracement into an overall bigger trend. So to do that, I'm going to add that to my formula, and we're going to test that and see how that works. So I'm going to go back into my system tester here, and I'm going to open it up, and I'm going to go to my buy order here. And what I'm going to do is I'm going to add a second variable here. I'm going to say that A1 has to be a new signal right there. And what I'm also looking for is I'm also looking for the closing price itself to be greater than its longer term moving average. So in other words, I'm going to go ahead and put in a moving average, do 100, and we're going to make it a simple. So now our second line of code here is saying that this has to be true, and it has to be a new signal, and the close has to be above a 100 period simple moving average, for example. That's the only change we're going to make. So I'll click on OK. And let's go ahead and run that same system test. Now, again, I'll choose that same 9 securities. I'll go ahead and run it. Hang on for just 1 second. All right. And when it's finished, we'll click on our view results. We'll take a look at it. And it looks like we still had a couple here that are in the red, but maybe not quite as much in the red. And now you'll see that the Qs is the top performer. And the other thing that jumps out at me right away is the number of trades actually dropped down quite a bit. Now I went, down to 6 trades, but I have five of those trades were winning trades. I only had 1 losing trades. And the other thing that jumps out at me as well is my average winning trade as compared to my average losing trade went up by quite a bit. So for example, let's go ahead and jump in and take a closer look at this first one here. This one generated the 34 points instead of the 111. But again, we only traded 6 times during that period of time. 5 of them were winners. 1 of them was a loser. The average winner was 7.4 and the average loser was 2.5. So again, that gives me a pretty good ratio there. But what's really interesting is this number right here. We were out of the market 1,100 bars. So in other words, we generated these 34 points over 100 bars instead of 100 points over 1,200 bars. Okay, so again, that's when I start looking at the results of these system tests like this. I'm looking again at a lot of different things, and one of the things of course, my most important thing is my average profit to average loss. And then the other thing I look at, of course, is how many winning trades versus losing trades. And the third one is looking at how much am actually in the market. And then I should add a fourth one there too. And the fourth one, of course, is the drawdowns, right? You got to be very, very careful with these drawdowns when analyzing them as well. But the point being is that with a lot of these trading strategies, when you really start to dive into these things, there's a lot of things that you can do to possibly improve them as well. So, all right, so I'll keep moving along here. Now, the other part to this article, there were 2 strategies that were actually presented here. And the second strategy that they presented covered the same time period. And this strategy, again, very, very simple. This time, they're only looking for 6 consecutive closing prices. And that is, in this case, they do have to be consecutive, meaning today's closing price has to be lower than the previous day. The previous day has to be lower than the day before that, and so forth for 6 bars in a row. When that happens, you're basically going to take a long position and you're just going to exit 22 bars later. All right. So again, pretty simple to test. So let's jump back out to the program and let me show you how we did this. Where are we? There we are. All right. And let me clean this up here a little bit. I'm going to get rid of some of these signals here. Delete all. And I'm going to go ahead and get rid of those. And I'm going to get rid of these moving averages for the time being. Now, for this particular strategy, we're looking for 6 bars to be closing consecutively lower. So here's kind of a trick here for you. I'm sure you probably have messed around with coloring the price bars on the chart and so forth, but if you double click directly on one of the price bars, you can choose to color code the price bars different colors. So in this case, I'm going to choose an up bar to be green and a down bar to be red. All right, we'll click on OK. And then I'm going to fatten that bar up there a little bit if I can. There we go. And I'll make that a little bit heavier just so we can see this. So what MetaStock does when you choose to color code a price bar, by default, it looks at the closing price of the security in relation to the previous bar. So what happens here, let me kind of zoom in on this little section right here. All right. It's looking at this close compared to this close. And if it's lower, it color codes that price bar to be red. If it closes higher, it color codes that price bar to be green. Now, the reason why I want to point this out is one very commonly asked question that I get in my training is that a lot of people will plot candlesticks, for example. I'm just going to go off on a small tangent here for just a second. And the question that I get a lot of is why is a bullish candle sometimes color coded red? Okay. So for example, like this candle right here is a bullish candle. And what I mean by that is it closed higher than what it opened. And for that reason, the body is open like that. But the weird thing is that it's colored red. Why is it colored red? And the answer is because when you tell it to choose up and down bars, it's looking at the closing price in relation to the previous bar or the previous period. Okay. So again, that's why you might get a red bullish candle and you might get a green, for example, like a green bearish candle, for example. And the reason why is because that closed higher than the previous candle. All right. So let me go back in and I'm going to change it back to a bar here, but I get that question a lot, so I figured out might as well talk about it. So by color coding the price bars the way that I'm doing this makes it really, really easy to identify up and down bars, right? Here I can tell very quickly that I had a group of down bars. I had 1, 2, 3, 4, 5, 6. I had 7 bars in a row that closed consecutively lower here. I can see each one did it, over and over again here, right? So let's go back into our formula here and let's plot the next indicator. And the next indicator, again, we'll scroll down here to the LMS group here. And the one I'm looking for this time is the high probability price reversal. So I'm going to go ahead and grab that, drag that up here to the top. And I'm going to shrink this up here a little bit. And we'll go ahead and drag this over. All right. So to make sure that this one's working correctly, here's our 6 bar right here. There's 1, 2, 3, 4, 5, 6. So there's 6 red candles right there. So I know that this formula is working correctly. To see what that formula is, let's go ahead and open it up. I'll just double click on it. And here's our formula. You'll notice that it's very similar to the previous formula we were looking at. The difference is now we're looking for the close to be lower than the previous day's close or the previous bar's close. And instead of looking for 9 periods, we're looking for 6 periods. And I want to know when that equals 6, meaning out of a 6-period window, I want to know when all 6 candles have met that criteria. Okay. And that, of course, is then going to give me or make this buy signal true. Okay. And so long story short is by plotting this indicator, I know that this is now again working correctly. And for that reason, then I can keep pushing forward here. All right. So then to test this strategy, let's go back into our system tester here. And I'm going to choose the second one this time. This is our Learn MetaStock High Probability Price Reversal. And I'll open it up. Our buy order, as you can see, is the same as what I just showed you of that custom indicator. And then our exit, I'm going to put the time stop of 22 periods. So I'm going to get out after 22 bars. So again, I'll click on OK. We're going to test the same 9 securities. And what we'll do is we'll test it over that 6-year period that they showed in the article. And I'll start the system test. All right. And should go through pretty quick. There it is. So now if I look at our net profit here, now on this particular system test, you'll see that we didn't get anywhere near as many trades as with the other system here, because again, it's looking for a pattern of 6 consecutive bars being lower than the previous one. So the top performing one in this particular case was the Spider. It had 5 total trades, 3 winning, 2 losing trades, and the average winner to average loser was 2.12. You'll see it only generated 12 points. Open it back up. And here again, as compared to the buy and hold, it way underperformed the buy and hold, right? But it only traded a handful of times here. And we'll scroll down here a little bit, and we're out of the market here, 1,500 bars. So in other words, we only tested 1,600. This generated those 12 points over 10 bars. Okay, so again, that's where, again, it kind of becomes interesting. So to test it, to make it a little more relevant again, is to then test it over a more recent time period. So again, what I'll do is I'm going to go back over the last 5 years. I'm going to choose the last 1,250 records, the same basket, and I'll start this system test. And we'll just see how it did over the last 5 years rather than back in 2016. So we'll click on our results. And now you'll see our results here. Actually, there was one security that actually appeared to do pretty well. It was gold. It generated a little over almost 30 points, but everything else was pretty low. And in fact, look at the bottom here. The Russell 2000 generated negative 48. So that one did not perform well at all, to say the least. But again, to take a closer look at one, let's go ahead and open up gold, for example. Gold came in at 29 points. The buy and hold was 47. We'll scroll down here a little bit. Had 10 total trades. 7 of them were winners. 5.9 was the average profit as opposed to 3.8 of the average loser. And down here at the bottom, we were out of the market 1,000 bars. So same thing with this one. Now this system overall, in my opinion, did not perform as well as the previous strategy that we tested. So again, is there something else that we could maybe do with this one? So I tried a few different things, but there again, the possibilities are pretty much limitless. So one really simple one that I thought maybe I'd try is I would take off this timestamp here. I'd take that off, for example. Let's set this back to 0. And for the sell order, rather than having it wait for 22 bars to get out, maybe just look for it to be crossing, for example, like a moving average, for example. So if I want to do that, let's say, let me go ahead. Let me just get out of here for well, actually, I'll tell you what, I'll go ahead and just write it. And anyway, the example that I'm going to show you here is just identifying where the closing price crossed down below its 50-period moving average. So what I'll do is I'm going to write that as a cross function. And the cross function is going to identify where the closing price crosses down below its moving average. So we're going to use a 50-period simple moving average. And we're going to identify when the closing price crosses down. So our formula right here is cross, move, close, 50, S, close. This again is going to identify where the closing price is crossing down below its 50-period moving average. And this is going to be our exit instead of the timestamp there, okay? Or the time stop, I should say. So let's go ahead and just test that. We'll click on OK. And I'll choose that same group of 9 securities. We'll click on our start system test. And when it's finished, we'll click on our view results. And there we go. And you can see now that gold actually did a little bit better. We had 10 total trades. 7 of them were winners, so 70% winners. And down at the bottom, the Russell 2000 still underperformed everything else. And still did not do very well, to say the least, but didn't do quite as poorly as it did on the first test there. But the other thing that did improve quite a bit here is our average profit to average loss. Now you'll see, for example, gold, out of those 10 trades or those 7 winning trades, our average winning trade was over 5 times the size of the average losing trade. So again, we'll open that back up here. And now you'll see that this actually performed almost as well as the buy and hold. You'll see again, out of those 7 winning trades, the average winner was 6.6, the average loser was 1.2. So again, that's a real nice ratio. And then again, down here at the very bottom, we were out of the market 790 bars out of the 1200. So, so again, it performed or basically generated this money out of 400 bars as opposed to 1200 bars of the buy and hold. So again, it performed quite a bit better, to say the least. But the point to this is that with these different trading strategies, whenever I go back and I review a strategy, this is how I try to go about it, or this is one of the methods that I use. I try to go back and I try to duplicate it to the best of my ability, number one. And then number two, if I can make a quick adjustment to it and a fairly simple adjustment to it, I'll go ahead and add that to it and show you how you can actually hopefully improve your results there as well. But as you can tell here, I mean, MetaStock's extremely powerful. There's so much you can do, and there's so many different ways you can go about this. You know, I mean, other ideas are maybe using some type of a trailing stop, for example, or changing the time periods on the time stop and so forth. But again, the possibilities are, again, totally up to you. So let me just jump out now. Here, I want to just show you for a second. I just want to show you around my website here for just a minute for anybody who's interested in learning a little bit more about the type of training that we offer. But primarily where we provide our training is we do up to 3 live classes per week. If you click on this live classes tab up here at the top, it'll talk about the different types of classes that we have scheduled for the week, the times, and then what we have planned. And then in the video library, is actually where we do, or where we keep the recording of our different types of trainings that we have available. So it's set up chronologically. So if you're new to MetaStock, you can really start off right at the top and just start working your way down. And we'll literally walk you from square one all the way up as far as you really want to go. And as you can tell by today's webinar, today was a pretty involved, pretty advanced webinar, to say the least. But let me just kind of scroll down here and just show you some of the different categories. But I'm going to scroll down past the getting started section, and you'll see that I've got a group, for example, just on the expert advisor, system testing. I've got a number of different system test ideas here for you. I got a number of different classes just on the Explorer. We've got, up to this time right now, we've got 5 different formula writing classes. We've got 3 different RMO classes, and the RMO, we actually show you actually how to quote unquote test it, and also wrote some formulas to help you with the RMO as well. I'm actually a big fan of the RMO, and you'll see that as you start going through some of my training there as well. But one of the things that I barely touched on in today's class is talking about stops. And inside of this, using different types of stops with your trading, of course, is very, very important. And as you can see here, I've got a number of different training videos here on how to use different types of stops that you have available, and also some that I've created on my own. Underneath that, I've got a whole section just on indicators. And then this class that we just did today is this one right here, identifying high probability buy signals. So once you become a member of the Learn MetaStock site, and you say, for example, you want to learn more about this class, you click on the Watch Now. And what this will do, of course, this will give you access to the training video. And then for any formulas that I create for you, it will be right here. You'll just click on this Files button, and that'll allow you to download any of the formulas that I create for you. And I've got a number of formulas, of course, for you throughout the site. And I don't know exactly how many, but there's dozens of formulas here that of course, that you can download. And the whole point is to help you get whatever it is that you want out of your MetaStock program. And then in addition to that, of course, I do product reviews on the different add-ons and so forth. And underneath that, for any real-time traders, I have a whole section just on Zenith as well. And Zenith, of course, can be very involved. And I've got a lot of different types of training available for you there as well. So if anyone is actually interested in learning more about our training here, once you become a subscriber to the Learn MetaStock site, we have over 100 training videos available. You have access to all of our different formulas that you can download directly into your program. We do 3 live classes per week. And our special that we have going on right now, if you're new to the Learn MetaStock site, is that if you purchase the first month at $99, you'll get 2 additional months for free. And to take advantage of that, you can do it a few different ways. You can call the MetaStock sales representative at MetaStock at 800-882-3040, or you can go to either one of these links. If you're ready to sign up, just go to metastock.com/learn MetaStock 3-for-1. Or if you actually want to chat with a sales rep, then go to that second link, which is metastock.com/sales chat. All right. So I hope that was helpful. I know that that's a lot of information. I'm sure probably a number of people there probably feel like they're being fed with a fire hose, but hopefully that helps a few people out there, to say the least. So Jeff, are you out there?
I am. Can you hear me okay?
I can. Thanks.
All right. Great. That was great, Kevin. I thought you did an incredible job for what it's worth.
Okay, thank you. Are there any questions or anything else that I can help at this point with?
Yeah, a little bit earlier, Barton Inkle says, I'm a subscriber and would like to get MetaStock formula program from me. I did not know you did this. How do I find out more about it?
As far as the formula?
Do you, so the question is do you write formula for subscribers? Is that a service you offer?
Oh, that's a great question. First of all, when anybody has a question about a formula, of course, we have all the training available for you up on the website. The first thing I ask you to do is that if you make an attempt at the formula yourself and it's not working correctly, then I'd ask you to go ahead and send me the formula that you've got. Tell me what's not working, what you're hoping it would do, what it would do, and so forth. And more often than not, I can help you very quickly for the most part. If the formula is really involved, I'm probably going to send you over to MetaStock support, because they've got some extremely good formula writers there, to say the least, that can write circles around me, to say the least. But yeah, I will. Yeah, I will help you to the best of my ability. But if you're looking for something just to be created from square one and it's really complicated, then yeah, I'm going to refer you back over to MetaStock. But if you've made an attempt, it's not working correctly, and you need some help, yeah, reach out to me. I'll be more than happy to try to help you.
Cool. We don't have a lot of other questions other than that, but I did have just kind of a high level slide that I'm kind of showing right now. I think. If you do join learnmetastock.com, and I'd recommend this, you're going to get 3 live classes every week, and you run those on Tuesday, Wednesday, and Thursday, right?
Correct.
One of the things I think is pretty cool is you'll get a dozen of dozens, I think is the number we decided was right, dozens of formula downloads. So videos where you go through kind of formulas, ideas that you've pulled from stocks and commodities, and actually make those available as MetaStock code. And they have videos that come with them. Is that correct?
That's correct. Yep, you got it.
In addition to that, you're going to get hundreds of instructional videos, including like 21 basic MetaStock videos, expert advisor videos, videos on how to use stops, icon videos. I had a whole huge list. That's how many I could fit on here, but just tons of videos that are actually available. And, you could come in and buy an add-on from us, and I guarantee all of them are good. But you're going to get all the formula, all the classes, and you're going to pay $99 literally for 3 months access if you're a new subscriber. So it's actually metastock.com or metastock.com/learn MetaStock 3-for-1, 800-882-3040, or metastock.com/sales-chat to take advantage of that. We do have another question here. How is Kevin's tutorials different than MetaStock's own instructional information? I'm going to let you take a stab at that while I fix this slide real quick.
Yeah, that's a great question as well. First of all, when you're getting started with the MetaStock program, the MetaStock company has quite a bit of training available, and it's really well done. And I highly recommend that you go through their training. And what I usually get, the customers that I usually get are the people that have gone through that, but they need additional help. What we do is we go way, way beyond the help, or I'm sorry, the videos and so forth that are available through MetaStock, number one. I mean, they do a great job, but again, like I say, as you can tell by today's webinar, we go way beyond that depending on what you're looking for. The other thing we've got set up there for you is we also have these things kind of set up in a chronological fashion where, again, you can literally just start right at the very top about introduction to technical analysis and so forth, and just kind of work your way down. But for the short answer to your question is again, we're going to go into a lot more detail. And if you haven't tried us before, I think you'll be pleasantly surprised at what you'll be able to learn from us.
SK has a question that I'm going to refer over to like our support desk. His question is, I have a candle volume and it's red even though it closed higher than the day before. There can be a couple of things that actually cause that. It could be like the expert advisor you have attached to the chart. It could be the highlighting that you're expecting. So I'm going to refer you over to metastock.com/customer, and you can just chat in there. They can help you figure out exactly how to make that behave the way you want it to. And I think that's all the questions we have. Like, I don't see any more. So metastock.com/customer for that. For those of you that want to learn MetaStock, again, $99 will cover you for 3 months. You can it's going to allow you the access to all the training videos, the downloads, the live sessions. It's a really, really great way to try it out. Metastock.com/learn MetaStock 3-for-1. Give us a call if you have questions about it, 800-882-3040, or chat online with us at metastock.com/sales-chat. Any final thoughts for us today, Kevin?
Thank you very much. I appreciate it. I think it's great. And again, if anybody has any questions, they can also contact me directly. I'll be more than happy to try to help them.
One last question. It came in. John had a question about individual training. Do you offer a one-on-one type of training?
Oh, that's a good question as well. I do. Actually, just go ahead and contact me directly. But how the individual training works is, first of all, I typically recommend, I try to find out, first of all, what your expertise is in MetaStock. Are you brand new to MetaStock? Have you had MetaStock for a while? And the reason why I asked that question is that if you want personal training, I'm more than happy to do it for you. But if you're brand new to MetaStock, I typically recommend you take a look at subscribing to the site first, go through as much training as you can. And then when you have like a very particular, you need very particular help on a particular system or whatever the case may be, that's where I can really help out with the private training. And how the private training is set up is that I'll meet with you and we'll either meet over the phone or do it through the internet. And I find out specifically what you need help with. And once I have a good understanding what you need help with, I will then create a customized class for you. And it'll just be between the two of us. And what I'll do is we'll share computer screens. So I'll work on your computer the entire time. So that what's nice about that is then if we make any changes, we create any formulas, whatever, any changes that we make at the end of the session, it's already done. Your machine's already set up. You're good to go. And then the other thing that I do for you as well is I also record the session and I give you the recording afterwards. So you have unlimited access to the recording session that we did. And the session lasts for up to 90 minutes in length. So it's, again, like I say, it's for somebody who really wants to zero in on a particular aspect of the program. And if that fits, if that's what you're looking for, I can really help streamline your learning curve there, to say the least.
Okay, and if they want to get a hold of you, what would you recommend is the best way to get in touch with you, Kevin?
They can either call me directly at could we, hang on for just one second, Jeff. Let's go ahead. If you would go ahead and give me back this screen for just a second.
No.
I'll go ahead. Man, that's tough.
Yeah, tough crowd, right?
I know.
You can have it again.
Cow. All right. So yeah, to get in touch with me directly, you can send me an email at admin@learnmetastock.com, and or you can call me directly at 801-953-6299.
All right. John says, super helpful. Thank you. Another question. This is Sandeep. I am new to MetaStock. I am not a subscriber to MetaStock. We can help you with that, Sandeep. Don't worry. My question is, can I access all MetaStock training videos with $9 for 3 months? So yeah, the $99 is going to be all of the access to all of the Learn MetaStock videos, complete site access for that 3 months. I believe that's what you're asking, Sandeep, based on that question. Okay.
Yeah, and that sounds good.
The other thing that's kind of nice with that, if you are new to MetaStock, it's a great way to get the ball rolling. And I think what I'm reading this, when I read this question again, it says you're new to MetaStock but not a subscriber of MetaStock. I think you're new to MetaStock, not a subscriber to Learn MetaStock. So this would be perfect for you. Just give us a call. We'll be happy to help you get set up. There's some really, really great training there. And welcome to MetaStock, Sandeep. It's good to have you as part of the family. It's a little dysfunctional. I'll just give you a little warning there. All right. Thanks, guys. Thank you, Kevin. Great class. Thanks for coming. Sandeep, thanks for using MetaStock. Stay safe, stay healthy. We'll see you at the next one.
Thanks again.